My name is Michael Guyette, publisher of the Lead Lag Report. Special guest for the hour, Jeff Booth, who I'm sure many in the Bitcoin community very much look up to. And Jeff, I was just watching your interview with What Bitcoin did on YouTube, and I have a lot of interesting things that we can kind of take directionally here. But before we get too deep into anything, just for the audience, explain who you are, what you've done in your career.
I hate doing this part.
I know, it's terrible.
Technology entrepreneur, invest in or co-founder of a bunch of technology companies, and I wrote a book called The Price of Tomorrow.
You've gotten much more succinct, I think, at doing that the more you do these. Okay, so first I want you to lay out, and I know you've done this many times before, but that's part of the gig, right? Lay out the thesis of The Price of Tomorrow, and then we'll kind of riff off of that.
It's actually a pretty simple thesis. It's just connected to a whole bunch of different islands of information that seem different. But the thesis is technology is deflationary, and it's exponentially deflationary. And in other words, we use it to get more for less. And as purchasers of it or users of it, we wouldn't use anything that didn't give us value. So it seems pretty obvious that more and more technology is deflationary, and it moves faster and faster. And that's up against a system, a credit-based system that must grow against that natural force. And so, that system effect through inflation, because if you don't let that system grow forever, you have a credit collapse, and the credit collapse is the entire system. That government policymakers would print against that natural deflationary force kind of forever, perpetuity, and bad things would happen to our society because they're two different forces.
Okay, and that's where Bitcoin comes into play. So I want to do a thought experiment with you for a second. If we never got off of the gold standard, do you think that Bitcoin would still come into existence? And the reason I'm asking that is arguably one of the reasons that the great financial crisis happened, well, not one of the reasons, the reason was excessive leverage because of the credit-based system and the lack of discipline and a finite amount of leverage you can take on, which is what the gold standard largely did. Talk through how you think the removal of the gold standard perhaps resulted in the conditions for the inevitable creation of Bitcoin.
And it's not just the gold standard, and the reason. So if I go back and it's kind of in a long-term debt cycle, I'd say the need for velocity in money, which gold couldn't really have. So and the combination. So two different things. One of the things, velocity of money on top of on a hard currency required a credit-based system. And that credit-based system, once on top of that hard-based system, gives an incentive to grow forever. And a politician is likely not going to come out and say, we're going to collapse the economy because there's too much credit in it. And everything is going to collapse in prices. So they're more incented to say, we can keep growing forever, and we'll just amp up an inflation rate by printing money. So, and the population would believe that, or want to believe that easier. And that sets up for these long-term debt cycles, which Ray Dalio talks about, when a country can't pay back its debts and it has to effectively default. And typically, instead of defaulting, do a soft default, and they print your money away. And as that happens around the world, politicians kind of blame outside forces for that to gain control, and you go to war and you reset around typically a hard currency again, and then the currency, then the new politicians say, promise us we won't do it again. But a function of the credit-based system was the gold standard because it needed to be. Could we have continued to grow without it with deflation? And growth with technology reduces prices. So could that continue to happen on hard currency? Yes, but you would have in gold specifically, you can't kind of gain velocity. You can't transfer it around the world at unlimited speed.
And the effect of that credit-based system is, especially when it's fiat and you can print your own dollars, is not necessarily default, as the MMT enthusiasts would argue. It's that you end up having a widening wealth gap, right? I think that's a different way of thinking about default, because credit ultimately goes to the top of the top. You mentioned politicians a lot there. My contention with the thinking around Bitcoin is I think that a lot of the problems with fiat can be solved more with laws, right? And the proper incentive mechanism for politicians, right? Talk through to me why you think that might be wrong, because there's the blunt force argument of a finite supply, right, of Bitcoins. But there's also the question of incentives. And you can argue that Bitcoin is ultimately about incentives, but why isn't it that changes in law isn't the answer to this?
Well, that's an interesting question because there's a lot of people that think that you can, but you have to understand how the laws are written in the first place and who controls the writing of the laws. And if we would, so currencies that could be manipulated through time to give their kind of whoever's in power, consolidation of more power at somebody else's expense, whether that's a nation against another nation or a person against a nation. History suggests that a currency that can be manipulated always will be. So if you have that, and then you have a belief in society, a wide-held belief that inflation is good for us, or we need 2% inflation to run a productive economy, and you have a whole bunch of people at the middle and bottom of the socioeconomic ladder that get their pockets picked because of that inflation. They get poorer and poorer and poorer. Who are they more likely to believe? Somebody that says it's those rich people over there and it's capitalism's fault. And those rich people over there, those visible people that have all the wealth, it's their fault. And we're going to give you more money. We're going to print more money to give you more money. Who are people, and I mean people, you and me, maybe not me, maybe not you, but who are the wide variety of people, vast majority of people likely to believe? They will believe the person who sells them, I'm going to give you free money, and it's that person's fault. And that is why central banks get co-opted by politicians. And communism and capitalism look exactly the same under printed money, because you don't have a vote in something that is, if you're at the bottom of the socioeconomic ladder, in something that's taking about 70% of, it's not taxes, it's a theft, but you don't have a vote in it.
Yeah, no, which makes sense. I mean, you have to have, a degree of responsibility by lawmakers, which we can argue is debatable because they have their own incentives and motivations. Okay, so
but let's just connect that to it. So at the bottom of so middle class and bottom, which is getting a further and further divide, they're incented to lawmakers that create it's those rich people's fault. And try to transfer wealth through taxes and everything. And there's not enough people at the top. There's actually not enough people in the entire system that you could solve this through taxes. So you have to solve it through inflation, which makes that divide worse and worse and creates more and more people looking at other people as the problem. And then politicians capture that anger and they change laws with it. That's what typically happens. On the other side of that coin, the wealthy corrupt through lobbying the system at the top, and they're kind of WEF is a good example of what happens when an influential lobbying group that is essentially directing policy worldwide and nobody elects them.
You mentioned the wealthy corrupt for a second, which is interesting because I would argue that the wealthy also corrupt correlations and diversification, right? So there are a lot of studies, for example, that show that when a stock goes into an index, suddenly its correlation and beta will closer match the index, right? Because everything moves within the index. And arguably the institutionalization of Bitcoin has increased correlations compared to the past as the wealthy want to get wealthier, taking advantage of the trend. Talk through the benefits and perils of the institutionalization of Bitcoin from the perspective of diversification, because I named the space purposely the Bitcoin comeback because it's correlated with everything else on the downside in this period here. But talk through that because I feel like that's something that most people are not really appreciative of.
And sorry, Michael, when you say talk through it from a bottoms up approach and how it'll eventually be uncorrelated, or
yeah, exactly right. Because I think what's the narrative that Bitcoin, for example, is an inflation hedge broke when equities broke. The narrative that right. So that's sort of
and I think it's because a lot of people are looking at it as an investment. And they're measuring that investment in fiat dollars, and they're measuring all of their investment in fiat dollars, and that the error code is what they're looking through kind of Bitcoin as when it's a new system. And let's do that thought experiment that you said. So if the entire system is based on credit and governments don't print, what will happen? They're committed. Central bank has independence. What will happen? Let's just play that scenario out. And you know that scenario, Michael. Everything rolls over. Even the threat of reducing, easing, and increasing rates, right now you're seeing everything rolling over. That rolling over precipitates a credit collapse, and that credit collapse gains speed faster and faster and faster. When people go to the bank to remove their money, they realize the bank is closed because the money was only credit in the first place, and the counterparty risk spreads all over the world, and everything fails. And all those failings, 22%, I think, of the S&P right now can't pay just the interest expense at the old rates. So what happens is rates go up, and those 22% of companies now fail on their debt and actually fail as companies. And all the employees in all those companies start failing on their debts. You have a precipitous unwind of that credit. And that credit is everything. It's an entire system by which we live on top of before Bitcoin. And so what would happen in that thought experiment is if that was allowed to continue, the only money that would be worth any value is the money that you would have under your mattress, because all the banks would be closed. They would all go under globally. In that thought experiment, what would happen in Bitcoin is it would fall too. But I sure would rather have a peer-to-peer money that I could spend with hundreds of millions of people building the new system in that than a bunch of dollars. So, because you would move quickly to another system. Now, in that thought experiment, that's not going to happen because governments have to print. And that's why I say the co-opting of the state central bank, they have to keep going. And you see right now what's happening globally. Yen is breaking, euro is breaking. And you're starting to see other countries ease and the US continue to tighten. And that, because a lot of the foreign debts are owned in US currency, if that continued to happen, it just unwinds all over the world. It starts to unwind all over the world. So this is interconnected, and governments are essentially what I said before. Now I'm going to use my people kind of to create a geopolitical weapon through trade through pegging my rates of currency or devaluing my currency so that so world trade breaks down. That's kind of what's happening today.
I had put out a tweet, Jeff, arguing that the student loan forgiveness discussions would be the first step towards broader government debt forgiveness. And correct me if I'm wrong, but I think a lot of the diehard Bitcoin believers would argue that that's sort of the inevitable path, right? That at some point you're going to have some kind of reset, and that's where Bitcoin steps in. But if that's the case, that would argue that there's still more potential for fiat to survive longer than most maybe would otherwise want to believe. So talk through that.
Yes, so fiat's going to be around for a long time. And if I said, and the best way to look at Bitcoin for anyone that's not or hasn't heard me is a new network that's building from the bottom up, and it's early. It's like the internet. And most people that are measuring it as an investment from the system. And what we just talked about before, whether prices go down everywhere faster than your new currency in Bitcoin, or Bitcoin rises faster than inflation, either or, what Bitcoin is doing is siphoning off all of the economic energy in one system into a new system that is peer-to-peer, that's impossible to stop, that has essentially unlimited velocity through code built into the structure, so that you don't need a massive credit system to be able to gain velocity, and you don't arbitrarily put our lives or people's lives in control of a few people. So that would be the biggest mistake I see, people measuring Bitcoin as investment instead of a transitionary mechanism. But that transitionary mechanism, the new currency that's being built, is early. And some of the products, just like the internet was early in 97. And so if you looked at the internet in 97, you could easily miss that Google was to launch in 2000, that Facebook in 2008. You could really easily miss everything that came after the internet in 97. And if you look at the big businesses at the time, they clearly missed it. And they missed it, and that's a bottom-up movement typically. And why is it a bottom-up movement? A lot of people in this space like to talk about when are the pension funds coming in, which they are coming in. When are countries' balance sheets coming in, when they are coming in. But what typically happens in any tech that it really makes a difference is that technology is a bottoms-up approach, and the bottoms-up approach ruins the old monopoly because they have no way to stop it. because it gives so much value to the bottom and to people that are purposely left out of the monopoly. And so if you think about El Salvador joining, now Central African Republic joining, and another country adoption through that lens, or the people that are using this and actually building on top of it, using it, many of those countries or people were the most left out of an economic system and could make a choice to kind of upward volatile currency before Western-based countries could, because we had always considered our currency non-volatile. That's going to change, and some of those so that bottom-up movement through people, because it gives the people locked out of the existing system so much value, is what's happening in Bitcoin.
Yeah, and I'm in full agreement with that. And I always make it a point. It's not that I'm anti-Bitcoin. I'm anti-narratives that don't make sense. I see a lot of social media that seem to make it seem like Bitcoin is inevitable literally tomorrow. But these things do take time.
I'm with you. It's going to take. If I said my best probable case is Bitcoin continues to take it, and how it continues, whether there's kind of tightening and everything falls and Bitcoin doesn't fall as much, or inflation and Bitcoin outperforms the inflation. Either way, Bitcoin's going to suck out more and more monetary energy out of the existing system that has to fail. By the way, that's actually probably the best place, because if we just said, let's let this fail today, we couldn't let that fail. Dictators would rise into the vacuum and laws would be changed. So I sure wouldn't want to be a central banker at this time. But the other side of that is countries have to kind of protect their national interests through currency anyway. And as they're doing that, that's what it's happening to raw materials today. Essentially, my raw materials or my energy is worth more than your printed money. And so you're all over the world, people are saying what is valuable and turning in. But so if I said my probable case would be Bitcoin kind of moves into kind of a reserve asset and continues its network effect. And other countries just think about trying to peg to it and keep their inflationary policies in their digital coins. And if they do that against accelerating technology, what would that would mean? And you had a neutral reserve asset around the world that countries are trying to peg to. What it would mean is breaking their peg faster and faster and faster because technology is moving faster. In other words, their currencies would fail at a faster rate, and that rate might be 30 years, but it would still fail. And each of those cycles would bring more and more people to Bitcoin as they understood the game they were playing. It has unlimited monetary velocity. In other words, the argument breakdown of we require fiat for monetary velocity because gold doesn't allow that breaks down. And it breaks down through tech. You're actually right in the fact that when people go into a recession or want to save, or because they're scared of the market and over exuberance of the market, that they pull in and they actually create it worse. But that whole cycle is created actually out of that whole cycle that allows that exuberant to go crazy to get to a debt cycle that can't be paid back. It is a human-based cycle that says we won't let a system fail. And so once you insert humans into the loop to try to drive the economy up through more printed money or more debt that can't be paid back, there's an assumption, and I think you're making an assumption, that eventually those same humans will remove that velocity and let the natural forces play, or remove that debt and let natural forces play. And history says they never do. They keep going and they blame somebody else. So we're making two different kind of thought experiments there. One, this system is a system that doesn't require the debt to do that. And this system also ensures that you don't have wild swings from these growth cycles that are unachievable to depressions that are caused by those growth cycles that are caused by people in the loop on debt. Yeah, no, I totally do. And I think this is probably best handled. But here's what ends up happening, and here's what's proof of what ends up happening. What you just said is that sounds wonderful if you could have a free banking system and that you would allow that to happen. It gets co-opted by a central banking system because people demand it, because of the removal of credit. When it becomes too hard and those banks, the banks that were taking the risks fail, then central banks step in and people demand it. And so in that, if you could have a free banking system, then you're probably right. You probably wouldn't need Bitcoin. You could create something like that. You can't. What history says is it doesn't last. We agree and disagree. And there's going to be a ton of experiments on top of Bitcoin. Free banking is going to be one of them. Some of those banks or exchanges are going to take too much risk because they want to leverage what you're creating. And in Bitcoin, they'll all go broke, or a bunch of them will go broke. So I'm not saying that credit can't exist. I'm saying on top of a system like this, there's going to be a whole bunch of experiments, and some of people are just going to avoid the credit and do peer-to-peer.
Hold on, Aaron, but I want to go a different direction for a second, because I think that's an interesting discussion. But let me put a different angle out there for a second. So I had Anas Al-Haji on a space before, and he's all about oil, and I had asked him the question of, how does Bitcoin interact with oil dynamics? And he made the point, Jeff, that you need to have Bitcoin's market cap be so much more on a level of magnitude that most people don't realize for it to be able to essentially be the currency of choice for oil, given how big oil is. Right. And what's interesting, I think, and this goes back to why I think it can take a lot longer than people realize. If you go with the secular oil arguments that oil prices or oil value keeps increasing over time because a finite supply and all this, well, then you almost have this race of Bitcoin's market cap against oil's market cap.
So let's pick on that and just ask a simple question, because these are all conflated. All these arguments get conflated because we're measuring it. The system of measure in the existing system is the one that's being devalued all over the world. And that's what's so hard for people to understand. And then they're making arguments from that. So the argument you just made, Michael, which a lot of people would share, just ask this: has there been more technology to produce oil prices and transport oil prices around the world and extract, store, produce than ever? And does it cost less labor, a lot less labor to find oil today? And I think you'd see that oil prices, without manipulation, should be down. The only reason oil prices are up is because of said manipulation in currencies that are driving scarce resources up. And then we measure that system and say, see, oil prices always rise, but when they were manipulated to rise in the first place. And that conundrum that you were talking about, and then we say, we can fix climate from this system. The technology reduces prices and gives us more for less. Yet we have to obfuscate all of those gains by making prices go up. And from there, what you see is the two different systems. The big thing that I realized in writing the book, and even afterwards, is there was no fix from the system. It was just impossible to fix from the system.
Right. So there's only delays, right? Correct.
Exactly. So it would kick the can down the road. There would be people saying, let's go back to a gold standard. But to get to there, then you'd have to say, okay, U.S., Russia, and China, the largest holders of gold, are going to have to trust each other's reserve. And everybody else is going to follow suit on a new standard that in today's world, where distrust is at super high, in today's world, that people are going to say, okay, we're going to trust everybody to do the right thing and not cheat. And I'd say, not that there's a zero probability event that they try, and gold prices can rise in that. In the long term, I think people are going to see that the new network is just moving faster and faster. And all of these reasons that people are looking around, realizing there's no fix from the existing system, they'd start moving over to the new system. And that system, to go to the point on the price of how big that new system will be, I completely agree with you. That's how early we are. We're so early in that new system, and it needs to be orders of magnitude bigger, and it will be. Yeah, so I like to talk about this in systems, and I like the question, but it's there is going to be a lot of innovation in this space, and a lot of this innovation, whether lending products or exchanges or XYZ or El Salvador bonds, some of it's going to work extraordinarily. Some of it's going to fail extraordinarily. And the ones that fail will point the way for new use cases to work. And we get caught up in the individual kind of ideas and say, this is the idea. Well, not realizing that the entire kind of open, decentralized monetary network that all of those ideas are building on top of is the idea. And some of the ones that are going to work, and if they work, they're going to give a blueprint and create a ton of value for entrepreneurs. They're going to give the blueprint to be able to build it faster and faster. Just like the internet. And I remember being through the kind of first .com collapse and watching a whole bunch of companies collapse through there. That then after that were recreated in another form that gave tons of value.
Presumably, Jeff, you have more of your invested capital than just owning Bitcoin. Right? I'm going to assume, right, that you've got.
You can assume correctly.
Okay. Yeah. Okay. So here's where I'm going with that. And this kind of goes a little bit to the store value rant I kept on doing all morning, really partially for fun, but just to make this point that narratives are largely nonsense. If we agree that it's going to take a long time, and if we agree also that nobody knows how long it's going to take, then you've got to size it appropriately relative to your own risk tolerance and time horizon, right? Not the time horizon of Bitcoin, but the time horizon of the individual self. From that perspective, how do you think people should position into Bitcoin from a weighting standpoint? Because my whole bit about store value is largely around this idea that if you keep saying it's a store of value, it implies it's safe, that you can put all of your net worth into it and be assured that when you need it, because of those inevitable black swans of life, it's not going to change very much. But we know that's not true, right? So you've got to size it appropriately. So how do you think about weighting versus time?
Yeah, and obviously, as you understand this deeper and deeper, for me, I've increased weighting. And then, but every single person is different. If you're younger and you think you want to go all in, like you know this from investing. How do you make a ton of money or lose a ton of money in investing? You're all into a trade or not, or in building a business. An entrepreneur takes crazy. They think it's kind of an asymmetric bet on themselves to create value, but they become all into that company. And then as soon as they win, they diversify. So it depends on where you are on that cycle, as you well know, and what any individual person should do or what they feel comfortable in doing. What I tend to look at it is what type of, at the investment level, what type of investments are going to outperform Bitcoin over long term. That's kind of, and there are if you had a technology company with network effects, or you could still find, and you were really early in that company and you designed that company, you can still find incredible value gains in some of those. So I'm an investor in technology. I'm an investor in technology companies where they can provide value to society. And I think you can, and you can capture that value. And I know I'm not specifically answering your question on weighting, and I want to be careful of not answering your question on weighting, because I don't want people to just follow my weighting.
No, of course. But actually, you hit on something which is, I remember hearing that at a conference many years ago. I forget who said it, but somebody once said that diversification is a luxury for the rich.
Yeah,
right?
And that's you're trying to protect your money rather than make more money. And so wherever you are on that spectrum, if you're a young entrepreneur, then you and you diversify all your time, you're going to be unsuccessful. And so the same thing applies here. So the diversification happens afterwards. And if you're a billionaire, you had a zero portfolio weighting to Bitcoin, I think that's a huge mistake. I think you're taking a crazy risk on your portfolio. So then I look at all the asset classes underneath that, and I realize that they're all denominated in the same fiat currency that needs to drive, like if you looked at housing, just play out the trends going forward. And if printing continues in housing, and if printing continues to drive this rich versus poor, either housing will be taken back by force through street riots, or housing will be taken in a totally different manner through taxes. And there is only two eventualities long-term of that. So I would look at that investment and I would make that a smaller investment part of my overall thesis. Now, I think you know this, but I started a venture fund in the space to be building on top of the Bitcoin ecosystem. And so the question is why? And the two parts to that. I think the ecosystem is now at a point that there's a really great investment thesis to deliver products on top of the ecosystem that'll bring the next billions of people onto the ecosystem. And so it's a really great asymmetric bet there. But it's actually probably deeper philosophically for me. And what I realized is, if I want a system based on fair rules, and something that can't be manipulated, and I know where the existing system goes, then I'm going to start investing way more of my time and energy into those entrepreneurs building on top of that system. And so now it's not just an investment for me. It's I want the world, I have an intention to where I think the world needs to move. I'm going to spend my time moving it there.
Talk through the way that people need to think about investing in Bitcoin versus the underlying blockchain technology itself, right? Because you can argue that they're related, but there's different paths on the blockchain side than just Bitcoin by itself.
Yeah, and I think so. If you just I do a mediocre job because I'm going to simplify, but if you think about a triangle and you can only solve two sides of that triangle, in a blockchain, decentralization, security, and scalability. And you can only solve two sides. And Bitcoin solved decentralization and security. And I think that's pretty evident. And that's why it grew to the size as a store of value that it did. And it's continuing to grow. But it didn't solve scalability, at least on the primary level or primary layer. And that opened up other blockchains to be able to solve scalability and miss either security or decentralization on it. And so all those other blockchains, which you could have smart contracts and other entrepreneurs could build on top of, became this kind of wild west. And the incentive dynamics, you could make a lot of money early, and then they kind of all fade out and they go down. But a lot of, I would say, people not realizing that long-term effects of building on top of that scalability for even the entrepreneurs was building on top of quicksand. And we're still really early and people are figuring that out. But that is the truth, because all of those blockchains have to be centralized over time and you risk changing of the rules. So it's not the entrepreneurs that are fault. They're just trying to build value on top of it, on something that's a kind of a stable foundation. And there wasn't a stable foundation in Bitcoin at the time that they could build value on top of. Now through Lightning, Taro that's coming out, there seems to be a stable foundation. There is a stable foundation, and there's an entire ecosystem of entrepreneurs that wants to build on top of a stable foundation instead of on top of quicksand. And so you're going to see an incredible port of talent over to the Bitcoin ecosystem because of that value. And that's what I'm investing in. And that's what I'm investing the time in. And because now through the second layer and so third layer, it reinforces onto top of the base Bitcoin.
Okay, so again, you've been involved with technology companies as an entrepreneur for a while, so you've seen many cycles when it comes to the VC side of things. I remember seeing a tweet a couple of months ago from a well-known VC individual who said that he's never seen in his career so much money being thrown at the space, even without necessarily a solid business plan. Just in terms of the here and now, I'm curious what you've seen in terms of the VC side of things, because oftentimes that can be a sign of a top, at least short term, or maybe intermediate term in a particular industry. Talk through that a little bit for the audience.
So in NFTs and all the other coins, I think I see that there's tons of money going in that with very little understanding of what we just previously talked about. And that's actually why it becomes an asymmetric bet. And I did see all of these times. I remember 1999 like it was yesterday, because I was building a company that was you could raise money on the back of a napkin, and then 4 months later, nothing. It was and so these essentially cycles of greed and fear drive over us. And those cycles of greed and fear are today hugely influenced by how much money the governments are going to print. And so if governments are printing like crazy, then a whole bunch of, effectively the incentive value is, and what people are trying to do, they don't want more money. They want to escape a system. They want what they think money will give them. So whether that's more time with their family, more safety, they want what they think money will give them. So as you manipulate money more and more, people are going to gamble more and take higher risks too. And if that's all an NFT ecosystem that's kind of building on top of an unstable foundation, I totally get why the incentives of making a fast money quickly would create a lot of people there. But it's little more than gambling. And in what's happened, what I think on Bitcoin is, and again, people could say I'm wrong, everything else, but I just, at a first principle level, and what I've seen in technology, is the technology keeps on moving forward and the adoption rate keeps on moving forward on things that really work. They care less about those cycles. Yes, like short term, it might go down, but the underlying technology hardens, gets stronger and stronger, and then people wake up on the other side of it and go, "How did I miss it?" So yeah, look into proof of work and why that's impossible on proof of work, because I won't be able to go into this right now, but governments essentially can shut down exchanges. They can go after exchanges, make it harder to interact with. But each government that's tried to do that, because there is no head to choke and there is the attack vectors, you'd have to go find all the nodes in the world that are all in different regions and all the mining, and it creates a game theory incentive to move beyond that. But anyways, do that work yourself. I'm convinced right now that there's no way that governments are going to be able to attack Bitcoin without actually making it stronger. And because if a government says we're going to ban Bitcoin, effectively what they're saying to their citizens is we're going to ban the internet, and it keeps on moving. So how did that work out for North Korea? And so this and it makes it more advantageous for other countries to adopt it faster. And that's where the free market is going to take this. So if a government says that, they're effectively with a megaphone telling you why you need it as badly as you need it. And what you'd see in growth rates of this, when governments try to ban it, that's when it actually grows faster. Yeah, so the venture timeline, we know that I suspect in the next 3 months, credit markets are going to really kind of start to thrive. If they're not already, they are already, but they're going to really start to break. Something's going to break around the world. And as that breaks, you're going to see yield curve control all over the world too. And yes, risk assets will move up again too with yield curve control or more printing. But at some point, that network of a Bitcoin, people realize what it really is in the network. And that's why, Andy, I tried to say before, whether all prices fall faster than Bitcoin or all prices or Bitcoin rises, that's kind of where I see this going, to remove the noise of essentially everything that people measure Bitcoin in is from the fiat currency being destroyed. So, but I'd love to hear your thought. Yeah, and I think the piece on there is it's hard to measure a new technology platform. Like effectively, if you could have invested inside of the internet, you couldn't. But if you could have invested in the layer of the internet, and then you gained value from all of the things that were built on top of the layer of the internet, I think that's the way to look at this, because I suspect as it eclipses gold as it goes through that next step, because people are starting to trade in it, create value on top of it, and actually use it as a currency, it moves faster and faster on those rails. So I don't think we have a historical look at what Bitcoin could look like other than something like the internet. And we never were never able to invest in the internet itself.
Yeah, and my response to that would be it acts like a risk-on asset until it doesn't.
Exactly.
I know that sounds silly, but that's just the reality, right? It's like
totally.
It's like you don't know what the reason is until after the fact. It could just be a function of time. But and again, I go back to my criticisms around the narrative is that people make the assumption that it happens tomorrow with a certain degree of certainty. And part of my ethos is that I don't believe anybody can predict the future. It's just the way that I operate.
So if you just keep going on what you just said on what has to happen as governments as a coordinated policy, and even if you're not a conspiracy theorist, and just say the function of our existing system, the entire function requires inflation, otherwise it's insolvent and collapses. And it requires ever greater inflation. And that ever greater inflation, essentially manipulated money, means manipulation everywhere in society, gives the same people the control function as they remove it from control function of humans into a society that looks very dystopian by nature. I suspect that we as humans wouldn't allow that to happen kind of on a global basis, but that is actually what you're fighting for. And that existing system, it has to remove individual rights and freedoms to be able to at the greater expense of centralization. It has to. It's a function of the currency. And so it's why in fact, that's one of the reasons why I'm saying just holding Bitcoin is enough for me. It's not just an investment. It may be my kid's future, and I'm going to spend my time building this network and that's based on truth, hope, abundance, rather than giving my time and leaning into a system that is going to fail or be centralized. And it gives you flexibility because some countries will opt out of that system. And so if you can remember 12 words, you can get on a plane, you can go anywhere, and that capital destruction is going to come everywhere. So exact. And it to me, it's not a lot of people talk about it's the greatest asymmetric bet of our time, which I agree with, but it's way more than that. I can't believe people look at it as a risk asset when it might be the least risky thing you could buy today.
And in fairness to that, I mean, volatility is not necessarily bad. I mean, it's perceived as risky.
Correct.
If you have to sell the investment to use that cash, right, for whatever reason. But yeah, I think you're right, and that's where I think a lot of traditional Wall Street also gets it wrong, right? In fairness to the Bitcoin community.
Yeah. So if you connect the dots on what you're saying, and what you'll see is this is kind of the beauty of this network, and why it's hard to, because Russia doesn't really want Bitcoin because it takes away from a centralized power. But they're trying to find out, how do I price my oil? What do I price my oil into? And so dictators don't exactly love Bitcoin because it removes the power. It puts the power back in the citizens' control. And as soon as we decide to take back that power, if enough people buy Bitcoin and start transacting in Bitcoin, remember, the government isn't just this opaque entity. All of governments, they're made up of us, our individual thoughts, our actions. So I suspect that will some try? Yes. But if governments try to, let's say North Korea gets into mining, right? And that's it. The margins compress so fast as more and more countries and other nations move into that. And I think it's going to be more denominated by a free market force than governments. So now, in a piece of Bitcoin, I think that's misunderstood, and maybe this is where you're going, I'll try. But I think people think about it as a reserve asset you hold, and now everything else is anchored against it, and you have a huge credit bubble on top of Bitcoin. That I don't think is going to happen the same way. And why? Because if people lever their Bitcoin, it's when it turns against them, there is no counterparty person that's going to save you. It's you're wiped out. And so what that means is the free market is in control, and every action on top of the Bitcoin network, essentially, we don't. If you kind of us in control, we use this Hangout right now on Spaces because it's free. It gives us value. And it touches millions of people now. And a free market working on top of Bitcoin reduces price over and over and over. In other words, the only way to gain more Bitcoin is to either mine it and competitively mine it today, or deliver value to somebody else. And that value delivering to somebody else is on a network that brings prices down forever, the way the free market should look, is the way to give broad-based abundance to society through a system that allows the free market to work. If you tried to take your Bitcoin, hire a standing army to protect how much Bitcoin you had and maybe make more, what you're doing is distributing your Bitcoin to other people. So the free market is really in force, which is the best way to move the abundance gain from technology, our time, to the broadest number of people.
I think that's a good place to end the space. Everybody that's been here, hopefully you enjoyed the conversation. Jeff, I really do enjoy listening to you because, again, a lot of people, I think, in the Bitcoin space say things that, to me, intuitively don't make sense. A lot of what you say makes sense. So thank you for coming on. Thank everybody for joining.